President Trump announced an indefinite ceasefire, but don't be fooled. The battle with Iran has fully moved into the high seas, and as the Strait of Hormuz is a total time bomb, the big question for traders is whether the risk of trade for the US dollar is reloading. In this video, I'm breaking down euro dollar, gold, and Bitcoin against the US dollar. So join me and let's have a look at what the chart analysis suggests. And looking first at euro dollar, we can see that we already got a rejection within the 1.18 and 1.1850. The price failed to successfully overcome the 1.18 psychological mark. And since then, it has been trending to the downside. But the key question here is whether this is indeed an actual bearish trend reversal. Well, actually, at the moment, the technical picture cannot confirm this case. First of all, we're still above the simple moving averages. And more importantly, we can see that the price is still trading above the 1.1640 territory, where the neckline of this potential bullish pattern over here, a double bottom pattern, is still intact. So we need to break below this territory and beneath the 50-day moving average in order to probably see a steeper decline towards the 1.15 and 1.1540 region, where the short-term support trend line is located. We have seen the price consolidating, finding both support and resistance within this zone. So I would pay attention to that territory before before the spotlight shifts towards the 1.14 zone. We can see that this is the floor of this broad wide range. The price has been consolidating above this territory since July 2025. So failure to hold here could send a stronger bearish signal for longer-term traders. Now, on the upside, in the event of an upside reversal, and we actually cannot exclude that case either, because the RSI is still above its 50 neutral mark, and the stochastic oscillator over here is already within the oversold territory. So that provides a ray of hope that perhaps an upside reversal could happen, especially if the support trend line holds firm. So in this case, the 1.18 and 1.1850 region could come back into play. And of course, we would like to see a decisive rally beyond that in order to target the 1.1925 region taken from February 9th, where the price found strong resistance around this level. And beyond that, of course, all the attention will turn to the 4.5-year high of 1.2080 seen in January, or even towards the 1.20 psychological mark. Now looking at gold, well, we can see a similar situation here. Gold has been showing some signs of a weakening momentum following the after reaching a high of 4,889, the highest since mid-March. But as we can see, the price remained constrained below the 50-day moving average, and the 20-day moving average is currently under examination, as the technical indicators down here are entering the negative territory. The RSI is already below 50, the stochastic oscillator is trending lower, and the MACD is also losing ground, set for another bearish wave below zero. So the technical picture is not encouraging, and what we are waiting now is whether the 4,650 and 47 territory gives way in order for sellers to reach the 4,380 zone taken from March. That was a key pivotal point back at the end of March. If it fails to hold, then the 200-day moving average could come into focus near 4,245. If that happens, that would be the first time gold reaches that line, well, at least since October 2023. Therefore, failure to hold here could be a serious violation, likely shifting all the attention towards the lower band of this broad bearish channel seen near 3,900. And perhaps a failure to reach the upper band of this bearish formation could actually be a discouraging sign that perhaps the price may lean to the downside. Now, in the event of an upside reversal, well, the 50-day moving average could be the first resistance to act near 4,870, and beyond that, of course, the upper band of this bearish channel seen between 5,000 and 5,090 could be a critical, actually break or make point. If the price manages to close above that decisively, then I would like perhaps the rally could extend towards the 5,320, which was a tough obstacle back in March. And finally, looking at Bitcoin, which has yet to show any discouraging trend reversal or bearish signs, but still we can see that the price is approaching a key resistance territory, the upper band of this soft bullish channel between closer to the 80,000 mark, while the price is also struggling to close above the February resistance near 78,500. So some caution perhaps is needed as the trend in the technical indicators looks to be leaning to the downside. So the stochastic oscillator is still making lower highs and lower lows. The RSI is also facing some weakness just below the 70 overbought level, and the MACD is still above its red signal line, but near multi-year highs. So some caution is needed. Perhaps traders may wait for a clear move above 80,000 in order to target the 84,500 and 85,635. And then beyond that, perhaps the 90,620 could be the next barrier to watch, since that was a key rejection territory at the end of 2025. Now, in the event of a bearish reversal, well, I would like to see a clear move below the previous high and perhaps the bar from March near 74,750. Failure to hold here could actually drag us down to the 71,100 zone, which was also a key resistance territory from February onwards. And then if that also proves to be a fragile floor, then the price may face a critical test at the lower band of this bullish channel seen near 67,800 and 68,970, a break of which could actually increase speculation for a bearish trend reversal, for a bearish continuation, and if the 65,000 floor fails to hold, then perhaps we may have a clear deterioration in the short-term outlook, which could bring the 60,000 psychological mark back under examination. So that's everything I wanted to share with you guys. Thank you for being here. If you like my video, please subscribe and follow us for more technical updates. So thank you for watching, and wish you have a great trading session.